And welcome back. Night number two of your technical analysis virtual workshop. I'm Scott Durfee. I'm privileged to be the first to welcome you out tonight. That's Ray Kimbrell. We'll be getting him rolling in here and talking to us as well tonight. Hey, gang, before we get started, there's a couple of housekeeping items I do need to take care of, and then I'm going to get right rolling into everything. Everything that we're going to be doing tonight will be for educational purposes only. It's important for you to understand that. When we talk about different stocks and different patterns and various things like that, we're doing that to help educate you, to help build your confidence so that you can make your own better choices. Now, that's not advice. We won't be giving you advice in any way around any of that. So keep that in mind. It's important for us to understand. Um, Before I roll into everything, I'm going to do this and introduce our other instructor. I was going to say our second instructor. Ray's second to nobody. I will tell you that right now. But I'll introduce our second instructor. Yeah, you can see Mr. Ray Kimbrell there. He's been an education coach here since 2004. Regular contributor on the Schwab network, specializes in teaching the Thinkorswim platform and the technical analysis and the option strategies and the advanced options and basically everything that we offer. Ray Kimbrell is highly qualified to be able to do that. Ray and I have been doing this together for about 20 years. It's been my privilege to work with him. So with that, Ray, say hi, will you?
Hi, it's good to see you guys. Anyway, it's great to be here again. A great night last night, and looking forward to another one tonight. And it's my privilege now to let you know that who's going to start us all off tonight, as he already did, and that's Scott Durfee. Been doing this since 2006. You also see he is a contributor to the our Schwab network, again brought to us by our Charles Schwab Media Productions Company, a separate affiliate company, and does a great job on that platform as well. Again, teaches our platform, Thinkorswim platform, technical analysis, stocks, options courses, and all around great family man and a great friend. And with that, I'm going to head it back to you, Sir Scott. It's all yours.
All right, fantastic. Thanks, Ray. We're going to get this thing rolling because we do have an awful lot to cover tonight. And I'm excited to cover the stuff that we're covering tonight. You'll remember that last night we talked about trend. We talked about support and resistance. If you'll remember right, we're looking for higher highs and higher lows in our trend, or lower highs and lower lows in a downward trend, or similar highs and similar lows. We talked about support and resistance and how important those things are. A ceiling and a floor, a break through the ceiling can become a new floor. A break through the floor can become a new ceiling, can be diagonal, can be horizontal, can be a culmination of all of the above. And so really great stuff that we covered last night. Tonight, we're going to be talking specifically about candlestick patterns. Not just candlestick patterns. Candlestick patterns will be a small portion of that as well. And then Ray's going to take it and talk to us tonight about technical studies. So we have a lot in store, a great evening planned out for you here. A couple of things that I just want to take care of quickly by way of housekeeping, if you will. I really don't know what else to call it, housekeeping or whatever. Many of you, perhaps some of you, perhaps may not have been able to join us last night. Um, Last night really is this series. One night, really, first night is foundational. Second night builds on the first night. Third night on the second, and so forth. If you want to, or to review it or share it with somebody, or go back and if you haven't had an opportunity to watch it, this is where you'll go. Let me direct you on how we got to where we are here. I'm going to come right here and I'm just going to go to the Schwab, SCH, schwab.com/coaching. Once I've done that, I'm going to come right over here and click on live. And gang, I'm going to ask Scott if you'll drop. By the way, we do have Scott Thompson. Many of you know him, and I want to go ahead and give him a great big thank you right now. He's going to be trying to keep up with a very busy chat box tonight. And if Scott, if you could drop that link in here that I provided on how to get to this, that would be wonderful. But for those of you who are following along, we're going to come down here. We're going to find the date that it was that it happened. One thing that we can do to make this less cluttery, if I unclick webcast, because this was a virtual workshop. There's a little bit of a difference, and you know what that is. So I'm just going to go ahead and unclick the webcast, and you can see now that this was the only thing that was here tonight. I have a on it. I have on good resource that there could potentially within the next couple of days be another virtual workshop added in June to this calendar. So keep an eye here. Remember how you got here. Keep an eye on this. We'll be doing the option strategies. Ray and I will be doing the option strategies class just like this, same format. And we'll be doing that as well in June. So keep an eye on that here. You'll notice that you can only go to April at this point, and as soon as that June is released, you'll notice that you'll be able to move to the June calendar. I'm going to come down here to watch again. What we're doing is trying to find last night's recording. I'm going to go ahead and click on Technical Analysis Virtual Workshop. That was last night's recording. Takes me right here. Click on Learn More, and then here we are. And so once I'm here, you'll notice again, we're back at that Schwab coaching page. I'm going to come right up here to the resources. And then here it is. Watch now, and it'll be there. And so for those of you who were not able or for whatever reason did not or maybe want to repeat, that's how you would access that. In addition to that, you remember we did mention a couple of things that's happening right now within Schwab. For example, on Friday, we have our Investor Day. A really big day, great things happening on that day. You can obviously have it all over the Schwab network, but I mean the Schwab website. But you can come right here, and if you'll notice, if you just come to Schwab, and again, go look, just do a search for National Investing Day. You can come right here, register now. Scott also has a link for that. So Scott, if you wouldn't mind dropping that also in the chat box, gang, watch for that. And go ahead and click on that. Maybe Ray can help get that pinned to the top, but that's how you would register for those wonderful things. Let's just real quickly look at the full agenda. And you can see, for example, essential rules for beginner investors. That's amazing. Wealth management 101, starter guide. I mean, can you believe this is free? How to vet stocks for long-term investing, and so on and so forth. I'm not going to go through. That's not why you're here tonight. I did want you to let you know, though, that that is available on Friday. That is going to be happening in lieu of our Q&A. Normally, we do a Q&A with these virtual workshop series, but because of the conflict of Investor Day on that day, we will be foregoing the Q&A. Now, for that reason, we're going to do our best to keep up with everything that's coming through the questions, etc., on the chat box. And again, we've got superstar Scott Thompson that's going to be helping us do that tonight. So thanks again for that, Scotty. Okay, let's get back to the topic at hand here. Tonight,
Hey, Scott.
did I miss something?
I did not hear you do. Did you do disclosures?
I did.
Okay.
I did. Yeah, I did. I did them right at the very beginning. I will go back just to ensure it, Ray. But again, everything we're doing is for education. We're not giving advice in any way. Okay, thanks, Ray. I think we doubled up on that, but we're good. Better to be safe than sorry.
Yeah, I didn't hear him as all. That's why it's like,
better to be safe than sorry. So listen, gang, tonight, this is the goals for this session. We're going to be tonight talking about candlesticks, candlestick patterns. We're going to talk about charting studies. Ray does a phenomenal job in helping us to understand charting studies, how they roll in, how to apply charting studies on charts using the Thinkorswim platform, etc. So without further ado, let's get this thing rolling. First thing I want to do right now is I want to talk about, let me get my drawing tool here. There it is. Okay, there. What we're going to do is we're going to talk about the anatomy basically of a candlestick. And we're going to talk about some various interpretations around a candlestick initially. We're going to build a story that the candlesticks are telling us. There's a consummate battle going on between the bulls and the bears. Y'all know, right? Bulls are bullish, that's up. And when we talk about being bullish, it's going up. When we talk about bearish, it's going down. And so the bears and the bulls are fighting. The bears are trying to pull it down, the bulls are trying to take it up. And we can interpret with some accuracy the fight between the bears and the bulls as we look at candlesticks. So let's just take a look at some of the things that are important as we do so. Right here, you can, for example, see we have I already messed that up. That's not accurate. I'm going to come down here. So when we have a big candlestick like this, what we're looking at is a period in time. This period in time can be a minute, it can be a tick, it can be an hour, it can be a day, it can be a week, it can be a month, it can be a year, it can be whatever. And so imagine this, within this candlestick can be a myriad of other sub candlesticks that create this candlestick. You'll see examples of that when we move, for example, between a 1 minute chart, a 1 day chart, a 1 week chart, etc. So keep an eye on that. Now, what does a candlestick tell me? Well, the color is extremely important. It indicates who won, buyers or sellers. Okay. And so we know a green candle, and the way that we have these set up, just kind of by default, you can change it later if you choose to. But the green candle, the way we have this set up, that's an up day. In other words, it closed higher than it opened. And so when I read a candle that looks like this, I know that it was higher than it closed higher than it opened. So the open is the bottom left. I know that it closed up here. I know that we have a high right here. And I know that we have a low right here. And then in addition to all of that, so in addition to those 4 points of data, which traders and investors, especially technicians, are watching, we have in addition to that another one that can be important as well, and that's called the range. Okay, the range is the top to bottom of the trade for the day, the very extremes, whether it was anyway, so that's how that works. So this is a big green candle. How do I know it's big? Look, compare it to the others, and that'll come more into play when we go live onto the Thinkorswim platform here in just a little bit. Now, when we see the length of the candle body, that indicates the strength of the buying or the selling. So the strength of the buying or selling can be indicated to us by the size of the candle. In fact, indeed is. Okay. Now, this one's important. A non-existent body, that signals equilibrium. Okay. Well, what would that look like? That looks like our second candle. I have an open, and we're reading from left to right. It wants me to draw a triangle when I draw a circle for whatever reason, and I'm not going to change it. And then we have a close here. It's doing that. I'm going to change it. We have the close here. I can't do it. We have the high, we have the low. Okay. And so when we have a non-existent body like that, what that's doing is it's signaling equilibrium, is signaling equilibrium for us. I need to see if I can just get there it is. No, that's the wrong one. Okay. This one is, I have a long wick. You'll notice this long wick going down, right? That long wick is not an open or a close, but that is where the stock continued, the stock price continued on that day. So, for example, look at this little candle here that I have here. I have an open, I have a close, and I have a high, which is the same as the close. That's the first time that we've indicated that because we have an open close, we have a high and a low, and those have gone on beyond the open and close. But this one, the close and the high is basically the same thing. But look what happened during this day. Look at the low. So at some point during the day, we had a high up here and a low down here, but that high up here was at the close. So that was probably at the end of the day. I mean, we could surmise that, base it with some safety, just looking at what we're seeing right here. But look at some point during the day what the bears were doing to the bulls. At some point during the day, the bears were pulling the bulls right into the mud. right into the mud. They're pulling them into the mud here. But look what happened. This looked almost like the Utah Hockey Club last night. The Mammoth almost came back and almost won. Pathetic, but anyway, stop laughing. I know you are, Ray. So the Bulls were able to finally. I mean, the Bears went ahead by a couple of points or what have you. The Bulls were actually able to finally pull it all back, not just recover, but then even close higher than they opened. That is an important, potentially, sometimes depending on where it is on the chart, that can be an important candle. We're going to see a lot of those tonight. Just a little kind of spoiler for you on that. That's called a hammer. That's called a hammer. Okay. Now, when we see a smaller wick, we know that can indicate a failed move. I mean, a long wick can indicate, sorry, a long wick can indicate a failed move. In fact, it does. And that's what we just talked about. That's a failed move on the Bears. Now, look on this one, going back to the one prior, that's a failed move on the Bulls and the Bears. That's thus the equilibrium. So in this one, the failed move being lopsided can tell us something completely and entirely different. So it's important for us to understand that. A small body signals indecision and possibly transition. Okay. A smaller body. So we see a smaller body here. Now, and that smaller body could be green and it could be red and have the same basic efficacy depending on other contributing factors at the same point on the chart. But let's go ahead and talk about this one. Where did we open? We opened higher than we closed. How do we know? Because it's red. We always put the O on the left side because we are reading from left to right. I'm going to go put an O. And then we know that we closed at the bottom of the body. We know that wick on the top, also sometimes known maybe even more appropriately as a shadow. But there we have our high. And then down here, we have our low, another failed move up, failed move down. This was not really quite a tie. The Bears did win, but this was a tough game. And you can see that it was just exhausting up and down. The Bears end up winning, but just by a narrow margin. So those are kind of things that we can look at when we're looking at these candlesticks and actually kind of begin to see kind of who's in charge here. So let me go ahead and just clear this whole thing. And what we're going to be looking for now when we're talking about candlesticks is we're going to look at how do they work together and what kind of messages can I begin to see or decipher potentially as I'm looking at this consummate battle between the Bears and the Bulls. Because again, remember, that's what I'm looking for. That's all I'm trying to interpret here is who has more power currently in this moment, Bears or Bulls, in this day, in this hour, in this minute, in this week, in this month, depending on the candlestick choice that we make. Okay, so let's go right here. I'm going to go through these candlesticks and then I'm going to patterns, and then I'm going to go to the live to the Thinkorswim platform. I'll show you how to set your candles up so that they look like ours. Or however you want to change those. And then we're going to go do some live examples. We've got time to do that tonight. We're going to go do some live examples on the Thinkorswim platform, looking at some stock examples and looking at, and specifically for some of these candlestick patterns. Okay. So the first one that I just kind of want to point out, I mentioned that we saw that on the other slide, and I said this is a hammer. You'll notice a hammer. You can't really see it super light. There's just the stocks moving down, and then all of a sudden we have a hammer here. We know that it opened here, it closed here, a very tiny wick at the top, big wick at the bottom, but it closed here. Now that looks like a hammer. That hammer could be filled. Now, when you see them like this, okay, I should mention this. So we have unfilled, and then we have dark filled candles. Dark filled are going to be down days. Unfilled are going to be up days for this slide, okay? So just keep that in mind. If it's a dark filled-in candle, that's a down day for this slide only. So when we have that hammer-looking candle, that can mean something. Now, does it mean something wherever it shows up on the chart? Can it just show up, say, for example, halfway between support and maybe resistance and just show up as a hammer? And does that mean anything to us? Not really. I mean, it can, but the idea here is to understand the relationship, and this is why we spent the whole day yesterday talking about trend and support and resistance, but the relationship between price pattern and support and resistance around levels of supply and demand. Because this is oftentimes where, as traders, we will have an opportunity to make some decisions, whether they be buy decisions, whether they be sell decisions, whether they be decisions to move a stop loss up, or a decision to maybe start scaling out or scaling in, and so on. So I think you get the picture. And that's important again for us to understand. It's got to happen at levels. These have to happen at levels of support and resistance. Now, remember, levels of support and resistance are horizontal and sometimes diagonal, or are diagonal and sometimes horizontal. I mean, and that's just the way it goes. So keep that in mind. Okay, so there's your hammer. We have an inverted hammer. Okay, no big deal. It's just an upside down hammer. Some think it looks like Thor's hammer. I don't know if that's true. I'm not sure who Thor is, but that apparently that's Thor's hammer. Um, uh, Piercing line. Now, what we're looking at here, and I should mention this, these are reversal type patterns. And these are not all of the patterns that are out there. These are just a few that we begin with so that you can again begin to understand the story that's being told. And I have to mention this again, you don't have to memorize what any of these candlestick patterns look like. I mean, or the names of any of these candlestick patterns. You don't have to memorize it. What you should become skilled at is learning to decipher the story that's being told because of the candlesticks, which manifest themselves through patterns. Okay, so here we have a piercing line. When we have a piercing line, the ball it comes down. I said the ball because I was going back to the analogy from yesterday. So the price comes down. It eventually hits a level of support. We have a down day, a big down day. That's a big candle. That candle carries some momentum to the downside. So that's one that sometimes, as it's approaching levels of support, etc., that sometimes technicians will be watching, paying attention to. But then the very next period, we have a up candle. It actually opened lower than it closed the day before. You can see it closed here, it opened here, but then it pierced halfway through the body. So right here, you can see right here, it pierced halfway through the body of that previous candle. That's called a piercing line. This is a bearish, or excuse me, a bullish engulfing. The candle at support, at support, at support, the candle at support, the candle body engulfs the candle body of the previous day. Better if it's a down day being engulfed by an up day. If it's not an up day, it's obviously not a bullish engulfing. So the second one has to be an up day. A bullish harami. I'm going through these fast, and the reason I'm doing that because it is recorded, and this happens to be on page 38 of your reference guide. So I want you to go back and take the time to study these if you wish. So bullish harami, it's an inside day at a level of support can indicate or signal a potential reversal pattern. Same with the morning star. You'll see over here now, if you just flipped all those upside down, they have different names. Hanging man, shooting star. We'll see a couple of these when we go live. Bearish engulfing. We may see a couple of these when we go live, and bearish haramis, etc. So, gang, I think that I'm ready to go live with you. A couple of things that I do want you to do, though. Oops, I didn't mean to go there. I do want you to do, though, is as we're going live here, I want you to be, again, don't get caught up in what's it called. Don't get caught up in is it exactly at a certain point, etc. We're looking for potential trend changes. We're looking to potentially get some assistance in tracking institutional behavior. We'll see that in big candles, and I'll point those out if we see them on the charts, okay? And also to pay attention to candles as price approaches support and resistance. Again, just going back to the things that we covered last night. So I'm going to, for about the next 20 minutes, I'm going to take you live to the Thinkorswim platform, and we're going to have some fun here. Ray, in about 10 or 15, Ray, I'm going to be pulling you in here, and we're going to do a hard right edge. I think you saw the notes on that. That'll be fun for us to do. So,
Yeah, man.
um, okay, let's do this. The first ticker symbol I want to take a look at. Let me, gang. I'm going to try to remember to point things out as I go through here. Little kind of maybe coaching points that can help you have a smoother experience with your Thinkorswim platform, etc. Sometimes I feel like I would just like to have nothing but the chart showing. And that's super easy to do. There's a couple ways to do it. The easiest way for me to do it, so that it's still readily available, is to just close this left sidebar. I'm going to click on the little drawer handle there, and it'll simply just close. We're on AMD. This is great. So let's go ahead, gang. Thanks for your patience. Little hiccup there. Let's go ahead and make sure that we understand how to set these candlesticks up the way you want to set them up. So you'll notice that we have these set up where they're dark green for the upside, and for those that are coming down or down days, they are red. Makes it super easy to differentiate. You can see the difference in sizes very easily. You see a lot of big candles, you see a lot of small candles, etc. So how do you set this up? Ray, go to the gear at the top there, right there. So just hesitate there for a second, click on that. We're going to come right over here to where it says appearance. Once I've clicked on appearance, you can see that I can make any choice here. Ray, do me a favor, change those from candlesticks to maybe a bar candle or a bar. Yeah, so change it to a bar. Go ahead and just apply it. And so you can set this up for any way that you want to set them up, whether you want a line chart, a bar chart, a candlestick chart. We even have Heikin-Ashi candlesticks. We even have trend candlesticks, etc. So let's go back, Ray, and just put it on as a normal red and green, fill up, fill down, etc. Well, that's just a regular candle. We're going to click on the regular candle right there. And again, gang, do not forget to always click on apply. Ray's pointing out over here that you do have choices. You can change the color of the borders. A doji. So Ray, right over there. Yep. So gang, a doji, we didn't talk about a doji on the previous slide, but a doji is very similar to the one that we saw that was opened a little lower and closed a little higher. Now a doji opens and closes at the same price and can again mean transition. So a lot of people like to maybe potentially have a doji a different color. If you want your doji a different color, you can pick that color. Ray's chosen white. I think that's fantastic. We'll just go ahead and stick with that. Go ahead and hit apply, Ray, and let's get those candlesticks back. I was having a
So
little anxiety
real,
attack.
real quick, Todd, I know that Todd, sorry,
Yeah,
Scott, a couple of questions coming across in the chat about
sure.
yesterday's, and I kind of confused them with my candles. Just to show you guys real quick, if you go to appearance and you go to candle trend, and that's where you saw those open candles, closed candles, and whatnot, and we can explain that later, but that's where you find those type things out. There's also Heikin-Ashi candles, all right, where it smooths things out, but that's where you find them all right up there, and you can set them up as you need to.
Fantastic. Thanks, Ray. That's fantastic, actually. Okay. Zoom out. Give me a 1 year chart. We're going to go ahead and do a little bit of technical analysis here on what's going on with your chart.
Let's just
Oh, I see. Okay.
switch down.
All right. Okay, Ray, do me a favor. Let's go back. I can't see the dates. Hmm. Okay, let's go back to, can you see your dates on your
Yeah.
thing? Okay, go back to 11/25. Oh, I can see it now. Okay. All right. Let's do it. Let's do this. Draw me a level of support right along right along the bottom there. Yeah, baby, right there, the whole way across. Just go ahead and draw that all the way across. Now, gang, one thing that I will again mention to you is remember when we're drawing these levels of support and resistance is not a to the pinpoint area. It's a dollar or penny. It's an area. So remember that. You'll notice that some of these, the wicks hitting it, some of these, the body's even in it. It doesn't matter. This is what we call, again, kind of a trampoline type of effect. So if as we're coming across here, Ray, we see, I'm going to go back to the very beginning, the very left side of your yellow line there. You've got a big red candle. far left yellow line. You know, far left, all the way to the left. Yep, you got a big old yellow red candle. Then you got one moving up, and you got some kind of action going up and down, up and down, up and down. And then it finally, you're looking at this. In fact, it's moving and bumping its head, Ray, at about 250. There's a level of resistance. And so, you're seeing that moving along there. And then, Ray, also you have a level of resistance at about 246-ish. Come up, 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 down, down right there. Yep. Maybe down just a tiny bit because you can see too that that also acts as a level of resistance for some of that action below it. There you go. Okay, so if you look just to the left of Ray's yellow line, the one in the middle, you'll see a hammer candle. Now, is that hammer candle in fact, Ray, you probably should extend that to the left further so we can actually catch that level of support because that's definitely a level of support there. When we see a hammer candle, we just went through that. When we see a hammer candle hitting at a level of support, what do we expect to happen? Well, first off, we expect anything that hits a level of support to bounce based on yesterday's. That's our expectation. When we have a candle that confirms or strengthens our confirmation that that's potentially what could happen, and you can see that it indeed did. Now, how high did it go? It went all the way up to resistance, came back down, and then watch what happened. It just broke, 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 broke that level of support, came down and found the old level of support. You'll see there, right where Ray to the left of Ray's pencil there, you'll see another hammer. A hammer at a level of support, we expect what? We expect it to bounce off a level of support when it hits level of support anyway. But when we have that hammer, that further confirms what we potentially would be looking at. So, gang, hopefully this is helping you or helping us to understand, maybe where some of these technical analysis can help us in making better decisions, in and out decisions. Ray, since you're drawing there and you've got a pretty good purview of what's happening there, except for that,
Yeah, no, sorry about that,
trying to
folks.
zoom in on the chart.
Tried
Yeah.
to zoom in and it went
Yeah.
nuts.
Go up to the top right and just there you go. Yeah. Yeah.
I was trying to zoom in here so they can see
Yeah,
that.
go ahead and do that, and let's just reiterate what we were talking about. So you can see, Ray, if you can come up to the top, that second level of resistance, and you can just see that how it kind of just free falled down. Look, gang, do you see different size candlesticks on the chart? This is important. When we see big candlesticks versus small candlesticks, these are what we call momentum candlesticks. Remember last night when I said that I could take the ball, I could bounce it off my desk, and if it went hard enough with enough momentum, could hit the ceiling in my office. And if it hit with enough momentum, hit the ceiling in my office, it could go through that ceiling and find a new floor, meaning Deb's office, my wife's office. Well, you've seen that exact opposite thing happen right there with that great big red candle. Oftentimes, when we see big red candles, when we see big green candles, okay, the question then becomes, well, how do I know if it's big? Um, if it looks big, it's big. You compare them
So
to the
this
other
one,
I mean, literally, that's it. You compare them to the other candles on the chart, and if it's way bigger than any of the other candles on the chart, then it's a big candle. And that will oftentimes indicate what's happening with institutional buying and selling. When we see that big red candle come down, and you'll notice, isn't it interesting that it comes right back down to that level of demand? That level of demand that's been a level of demand in the past. We get not one, we get two hammers at that level of demand. And then look what happens. Go ahead and zoom back out, right? It continues to go up. So pretty helpful to understand. Ray, do you have any comments? I mean, you're driving this. I mean, you're seeing what's happening there. What would you like to point out in
no,
addition?
I'm just saying, I think you telling them and everybody to understand this, please, folks. And Scott is right on the money here with, where are the candles in relation to the support and resistance? All
Yeah.
right. And that is a key indicator of how you want to look at a lot of these patterns. Okay. Not just hammer patterns, but when you get morning star, evening stars, all the hanging man, not just the hammer candle, but all the patterns. So, um, you know, when you have a chance, if you need to even copy, that page or print that page out of your reference guide as you're learning the candles patterns, do that. It can help you, refer to them quickly. But Scott is on the money. I think that's one of the things you might want to make sure you take away from this is where are those candles in relation to support and resistance?
And that's all that matters. I mean, you can see, for example, I don't know, there are other, and I'm sure there's one. I can see a couple of candles that potentially look like they could be hammers or what have you. But when you see them and they're not at levels of support and resistance, the efficacy is just not there. It has to
Right.
be at a level of support and resistance in order for it to be the case. Ray, let's go to ALLY. Um, let's go ahead and draw in those levels of support and resistance. I'm just going to go ahead and let you put those where you're seeing them. Don't hesitate to put in diagonal ones if you see any of those as well. Yeah, there's a good one. Maybe a horizontal one right below that. Oh, look at that channel. Okay. Okay, I love this. I love what you're doing, Ray. In fact, I love that we're doing it this way because what it's doing is it's giving me different eyes. I wasn't seeing some of the same things you're seeing, but now that you're pointing them out, I'm seeing some of these candlestick patterns begin to develop around these levels of support and resistance. This is actually really cool. So let's go back, Ray, to the very kind of far left of your bottom support line. And let's just take a look at what's going on there. You want to kind of walk us through that for a second, and then I'll take it in a minute.
Yeah. So, as you come back, coming through, excuse me, through here, what is this, this candle pat? Let's zoom in.
There you go.
All right. Oh, I don't know if I can do it that way.
Yeah, you're good.
Move it up a little bit. There we go. I kind of, yeah, well, okay, this works. So right here, all right.
Yeah.
So you got some undecision candles or very small bodies, a lot of shadows, wicks at the top and bottom, all through here, a lot of indecision. All right. Then right here, what is it, folks? We just talked about it. Starts with an H. Thor's hammer, right there.
Starts with
Yes.
an H and rhymes with hammer.
Yep. And then you get confirmation and off to the races you go, so to speak. All right. And so as we see this, I don't know if I can, I don't have the ability to,
I think you
there we
do.
go.
Yeah,
We
there
can
you
move
go.
it a little
Yeah,
forward. Let
yeah.
me move this down a little bit so we can see
Yeah.
everything else. Okay.
Thank you. Perfect. Thank you. Thank you. So you can see what's happened is it's come up, moved off of that hammer, and as it went up, one, two, three, four, five, six, the seventh day, we get a momentum candle. And that momentum candle could be a signal. In fact, look what happened the next couple of days. They were both moves to the upside too, but they started to get smaller as they hit that predetermined or had already been level of resistance, right? Which can be again a level of supply. And so when we see those levels of supply, we see that candle diminishing in size. And as it diminishes in size, it actually starts coming down. And then we have several down days in a row. In fact, we have a momentum down day that's bigger than the momentum green day that we had coming along here, finally ending with a doji at a level of support. A doji is an indecision day, but look what happened. It's a failed move. A failed move to what side? This is a big failed move to the downside. So what happened? Let's go back to the storytelling. The Bulls had the Bears in the mud. I mean, the Bears rather had the Bulls in the mud, and the Bulls were able to gain enough strength to come back. And though they didn't win, they could have got beat bad, but they didn't. Ended up in a tie, indecision. And so when we see an indecision candle, that can be treated much like a hammer candle at that level of support. Look what happens. Now we keep coming along here. Some may have entered, some may have not. We do have a bit of a momentum candle develop. And that would have been a potential entry signal. We'll talk about that as we talk about holds and different things as we move through the course. But gang, again, Ray, go ahead and just keep moving along there, and I'm going to let you take it over here in just a second. But as we transition, gang, you can see big momentum candle in the middle there, that big green one. We have a hammer looking candle at a level of support. Now, one might say, but Scott, that looks more like a hanging man at a level of resistance. So remember, gang, we go back to that big green momentum candle. We have moved up into the zone of resistance, even with that big green momentum candle on the left there. And as it's moved up, all those candles are in a zone. That zone can be resistance, that zone can be support, because remember, old resistance can become new support. So when I see that candle, that hammered looking candle at that level, I have to ask myself, is that going to be resistance or is it going to be support? So I may look for some confirmation. I get that confirmation right there. Right there, I get a close above any of the lows, the highs of any of those low days, and I get that confirmation. And as I keep moving up, you can see that again, the story's being told by the size and the shapes of the candles. And oh my gosh, the amount of confidence and better decision making that we feel like that we can often make because of better understanding of the story, again, deciphering that story through these candlesticks, the better we are. That's
So what is
true.
this right here, folks? This is a bearish engulfing, yes. Name should scare you almost if you're bullish, right? A
Bearish
bearish
engulfing at a
engulfing.
level of resistance.
Yep.
Yeah. Yeah.
So there
So
you go.
that great signal. Yeah. Yeah. Again, we're not going to be able to take the time tonight. In 90 minutes, we can't cover everything about candlesticks. I'm going to encourage you, though, before we kind of transition over here to Ray, to encourage you to go on the YouTube channel. In fact, you're already on the YouTube channel. While you're here, go ahead and hit subscribe. While you're here, hit like. While you're here, also remember that as we draw closer to the end of the evening, we will have a survey that we'd love for you to fill out. That's how we get better, is by your comments, etc. So, Ray, I'm not sharing any of my stuff, so you'll have to.
Yeah, I can do it. So
Okay.
let's everybody should be in your house giving Scott a big round of applause, knocking it out of the pitcher. All right. So one of the couple of things that I want to show you real quick, and I think um, Scott Thompson dropped this link in earlier too, and that's the Thinkorswim platform walkthrough. All right. Now, there are literally thousands of you guys out there in the class tonight. Thousands. Okay. So if you're all trying to hit that QR code right now and set up a one-on-one to get, real in-depth. There was a lot of questions in here about how do I move the watch list over? You can do that going through the shared items. How do I put the dollar sign on the trend line? You can do that. All those kind of cool questions. These guys and gals are wonderful and they can help you. Now, if you hit the QR code and try it right now, and everybody does this at once, you might get a page that says, "Oh, we're having difficulty to get you in." Just keep trying it, all right? Or do it after the class is over, all right? But it will definitely get you through. I know some folks tried last night to get in. They're having some difficulties getting it in, but it will work, all right? I promise you. Just be patient with it. Like I say, when thousands hit it at once, it gets a little overwhelmed, right? Just like us trying to answer your questions. There's thousands rolling through there on the chat. So thanks for the patience, okay? And that's how you do that right there, okay? Now, reminder again, we have some events coming up, live events, schwab.com/coaching, like Scott was showing you earlier. And you can see that we got the market drive coming up. It's a one-day event. It's going to be in the Renaissance Schaumburg Convention Center, beautiful hotel. It's a one-day event, bigger picture of what's going on in the market. We have a great lineup of presenters, instructors. We'll all be there to help as well with things. So if you can get out to Chicago, there it is. Then we have this class live in person, San Diego. All right. Uh, Beautiful city again, beautiful hotel, June 5th and 6th. You'll see Scott, myself, Ben Watson, several other coaches will be presenting as well. Great 2-day event right there. Day one is what we're doing right here for the next 4 days. And then day two is options. All right. And then this one, back in the same hotel the market drive is in July, same thing, technical analysis and then option strategies. All right. Now, some of you are going to ask, what about this city? What about this city? What about this city? If you go to schwab.com/coaching, you'll be able to see all the live events coming up and you'll be able to register for them if they're ready for registering. Okay. Sometimes we got to get the hotels locked down, but just hit the buttons in there, follow the directions, and you're in. And we're looking forward to seeing you. All right. Scott, anything you want to add there? No, my friend.
No, I think you got it pretty well covered, Ray. Great
All right.
job on
Well,
that.
don't go too far because we're going to do I'm going to have you come in here with some stuff and as we get into our technical indicators. So folks, here's the cool thing about my section. That is my only slide. All right. And so we'll actually replicate that slide in a minute. All right. But that's it. Okay. We're going to do everything live when it comes to this section of the platform or discussion of the or the learning. So with that, I'm going to zoom up here and I'm going to go back to our Thinkorswim and we're in. Now, a couple of things I want to cover with you guys. First, though, is this. Okay. How do we get technical indicators onto the platform? Where do we find them? Where are they? Okay. And one of the biggest questions, and Scott, I know you get this a lot when we get the classes, right? And that is this, folks. What is the best indicator, right? What is the best indicator? All right. And so let's go find the best indicator. So what we're going to do is we're going to go up here to the top of the blue bar where in the charts tab, we're in charts tab. We're going to go to the top of the blue bar and go to this Erlenmeyer flask. Some people call it a beaker. All right. But I do think the actual, where's my really smart people out there who know chemistry and all that kind of neat stuff? Erlenmeyer flask. You're going to left click on that. And then you're going to get this edit studies page, all right, where we put our studies in. Okay, now over here on the left side are the studies. Okay, and I'm going to start scrolling down and I'm going to start talking to my good friend Scott Durfee as we do this. Now, Scott, I know you've gone through every single one of these studies, yes, and you're totally memorized, right?
Yeah, totally memorized, Ray.
Yeah. So, as a matter of fact, what I want everybody to do here in class, okay, is I want everybody in class. This is your homework tonight. So, this is a class. You're in a class. So, don't think you get away scot-free without doing anything, okay? I want everybody to go through and go to every single one of these studies. Hey, by the way, look, Darvis box. I think somebody last night showed you Darvis box by the name of Scott Durfee. Yes. All
Yeah,
right.
and that study has application, but I don't know that it's the best study. It depends on what you want, right?
There you go. This is true. So here's the cool thing. Let's say you don't know what Darvis box is. See the little question mark that I'm pointing to right to the right of Darvis box? If you click on the question mark, all right, it will eventually load in there. Okay. We've got a lot of things open here, so it might take a minute. All right. If not, we'll keep moving. But it'll load in there what the Darvis box is. Let's keep moving. I got too many things opened up here at once to teach with. But as you keep going down, you can see we're still it's the F's. We're still in the F's. There are tons, all right, of different studies. We keep moving down. We're going to get to this one, this MACD here in a little bit. All right, but as you go down, you go down, you go down, you keep moving. We're in the M's, now the O's, P's. All right, we're getting close to we're in the Scott, I think I found the best one. There it is, the Ray study. Thank you all very much. There it is. Actually,
Right. You don't even know what the study does,
I don't
buddy.
even know what it is.
I
Yeah,
know.
there,
I
there,
know.
there is
I
no
know.
one best study, folks,
Yeah,
but I do like doing
Ray
this.
one day found a study with his name on it, and he hasn't been able to let it go. But he hasn't taken the time to know what it means.
No,
So,
I don't. Anyway, unfortunately, I've got too many things open. It's going too slow for you folks. I don't want to waste your time. Go in there and click on them yourself, and you can see different ones and how they work. But you can see there's a lot of them. And we talked here for about a minute or so, a minute and a half, and we went through there's a lot of studies out there, okay? So let's talk about some of these studies. Let's talk about some of the things you can do to help a chart going. And let's do this the first one, all right? The first one we have here, by the way, is called a simple moving average, all right? All right, and all I'm gonna do is, and we did this yesterday, but you start typing the word simple, okay? and you'll see that it'll find anything with the word simple in it, okay, or start with those letters. And here's simple moving average right here. All right, let's see if it'll click again. Too slow. All right, we're going to double click on, we're going to highlight it and you add select, or you can just double click and it'll move it automatically into the pricing range. Okay. Now, the reason I'm starting with simple moving average is this is one of the studies that's probably more commonly used. I think that's a fair statement. Okay, and then say it's the best. Okay, but it's more commonly used a lot in a lot of applications. Scott and I did used it yesterday to help define trend, and it can also help define support and resistance. Okay, and so with that, it's going to help us with our decision making when it comes to, should we get into a trade or get out of a trade? All right. So the whole idea behind using technical analysis in these studies is to help us make informed decisions. So we're not just guessing if we want to get in or get out of a trade. Scott, what are some of the of your feelings about the technical indicators for that type of thing for your trades and your timing?
Yeah, technical indicators are kind of the next step in my view, Ray, beyond when we again trend, support and resistance, candlesticks, candlestick patterns, maybe bounces and breaks. We'll talk about those tomorrow as well. But those kinds of things, especially when it comes to trying to understand I'm a horse trainer, and one of the things that, as a horse trainer that's important for me is to understand pressure and release. Well, there's pressure and release also when it comes to the stock market. And so being able, I think, Ray, to understand where's the pressure and where's the release from that pressure around those levels of support and resistance, I think a lot of times these oscillating type of indicators and other indicators can actually begin to be very kind of helpful in making better decisions, or at
Yeah.
least gain confidence in them.
Yeah. So I see this a lot in the queue in the chats. We get this question a lot in the live workshops when we do this. Well, what about an exponential moving average? All right. So let's put it side by side. All right.
Yeah.
So an exponential moving average just is more heavily weighted towards the more recent price action, whereas a simple moving average uses the entire time frame. Okay. So depending on the period your chart is, will also be what your moving average is. So if you have a day chart, like this is a 1 year day chart we're using, then the simple moving average and exponential moving average, all right, will use the closing prices of each trading day. Okay. If it's a minute one, it'll use the closing prices of each minute. If it's a 5 minute, it'll use the closing prices of each 5 minutes. And then you'll add them up all together, and then you'll divide by that denominator. Okay. And it makes a plot on the chart. Then the next time frame, all right, adds the new, takes off the old, adds the new, takes off the old, and it creates the line. And that's a moving average. Okay. So let's go in here. And let's go in here and we'll change the simple moving average. We're going to use the gear. All right. And we're going to make this a 30 period. All right. 30 period moving average. And for lack of, let's just make it easy. We're going to be using day charts. So you're going to hear me say 30 day or 20 day or 10 day or 100 day. All right. So I don't want you to get confused, but it really is a period. Okay. And then I'm going to make this I'll make it this pinky color. All right. So our red, green colorblind friends can see this. Okay. And then we'll make it a little bit fatter. All right. And then we're going to hit OK. And then we're going to go to the exponential moving average. And we're going to change that one. And we're going to make that one also 30. Okay. And then I'm doing this so I can show you the difference or the similarities and differences of the two. Okay. We'll make the same thick line, but we'll change the color. We'll keep it blue. All right. And then we'll set OK. All right. And then we're going to hit apply, hit OK. Now let's get rid of all these drawings real quick. Clear the drawing set. Yes. All right. And we'll stay on Scott's ally. All right. Now, so the red one was our simple moving average. You can see right up here where it says simple moving average. The blue one is our exponential. And you can see that in the last 30 periods, how they come a little closer together at times, further apart at times, but it's measuring the same time, but weighting heavier the later days of the moving average itself. Hope that helps a few folks. That comes in a lot of questions in there. I saw it come across the chat a lot. I want to get that in. All right, so let's go back in now. And we're going to go in and go to our study. And I'm going to get rid of the exponential so we have a little cleaner slide. We hit apply, hit OK. All right. And then I want to hit a couple of stocks to show you what's going on with some of these. We're going to do AMD. All right. And let me get rid of those drawings as well so you can see what's happening here. All right. Clear the drawing set. All right. So 30 days. Now, can you see how the 30-day, if you remember from yesterday's class, a 30 period or a 30-day moving average, is that a short term, an intermediate term, or a long term, okay, time frame? All right. I know we got a delay here. I don't want to wait along too long. I'll give you the answer. Intermediate term, right? Because it's what? Weeks to months. Okay. So 30 trading days, that's going to be about a month and a half almost, right? All right. So in this case, it's showing you where this stock price is in relation to that moving average. And what is the trend right now? The trend is up. Okay. So if the trend is up and you want to get into this trade, all right, you want to get on the northbound bus. When we used that yesterday, we used Ben Watson's analogy. All right. So we're on the bus, we're going north, we're very, very happy. All right. The trend gives us that direction. Okay. And a matter of fact, on this trend, what kind of candles are bouncing and hitting off of this trend? Is that a big giant momentum candle? All right. Yeah, it is. Okay. And then it's giving you some signals, giving you some confirmation. So, back when it started turning up back here and you saw this formation, could that have been a signal for you to get in? Maybe it is. Okay. Maybe it is one for you. But I want to show you how you can use that moving average as a gauge. All right, let's look at a couple more. Let's look at Apple. All right, Apple, here we go. So right now, 30-day moving average, okay, is turning which way? It's turning back up. Okay, so our in this case, an intermediate uptrend. All right, intermediate uptrend of the stock. Okay, and you get a kind of feel for where they are. Look at these candles that are forming here. Is there a indecision? Then you get a hammer. All right, right there, right on the moving average, acting as what? Support. Okay. Scott just taught you that. Look at a few more here. Now, I'm only showing you one right now because I'm going to start adding on to these. Okay. I'm start adding on to these. And you'll see how as we start entering more technical indicators, it might give you a clearer picture. Because I saw some questions come across earlier. How do I know when to get in? Right? That's the big question. Fundamentals is the what side of it. What do I want to trade possibly? And then we use technicals to help us make a decision of getting in or not. So what is that candle right there sitting on this intermediate moving average or this trend, intermediate term trend, 30-day moving average? What is that right there? All right, nice little hammer right there going in there. It is, okay? So if you had that one indicator, could this may have helped you back in the days here? Okay, one more, and then I'm going to start adding some things to it. PII, look at this. All right, it's all we have on our chart is one indicator. All right, and we have this giant candle. What happened? Yes, news. Looks like they might have done pretty well on their earnings. Okay, so let's keep moving with this now, but let's start doing some other things. Let's start adding some more indicators to maybe give you an idea. All right, so I'm going to go back to this Erlenmeyer flask. All right, and I'm going to add a couple of more moving averages. All right, we
Hey,
did this
Ray,
yesterday. Yeah, go ahead.
maybe use a shorter time frame. Those candles are difficult to see.
Oh
Maybe
yeah, I'm gonna start zooming in here. I'll do that for you.
okay.
Appreciate that. All right, so I added two more moving averages. Okay, and all three are some moving average. So we're gonna change this 30. We're gonna go to the gear, and instead of 30, we're gonna make this a 10-day. Okay, we'll keep it red. All right, we'll say okay. And then we're going to go to the second one. We're going to go to the gear. All right, we're going to make this a 50 intermediate time frame. Yes, we'll change that to 3. We're going to change this to, let's call it, let's do it this orange color. That way everybody can see it maybe a little better. And then we're going to go to our third one, go to the gear. And then we're going to make this a 200 periods, in this case, days. All right, we're going to make this a 3, and we'll turn that golden. All right, and we're going to say okay. We're going to hit apply and okay. So now, folks, all right, I'm going to change this to a 6-month one-day view. Is that a little better? Scotty, that a little better for you?
Yeah, way better, bud. Way better.
Okay. All right, so folks, so now we have these moving averages, all right, different colors, so you can see them in there, maybe a little brighter for to help you folks see a little better. And we see that, okay, so our 10-day moving average is pinky color one, all right, moving up. Our intermediate term is starting to turn sideways, and our long term is up. And what happened today? Actually, it happened yesterday, and then today we got a big move through the 200-day moving average. Yes, higher highs, higher lows, higher highs, higher lows, and a bigger higher high. Okay,
Hey,
so
Ray,
yeah,
quick observation if you don't mind, but that big candle probably an indication that today's conference call went well.
yeah, I would say so.
Yeah. Yeah. Yeah.
You
You may
might
want to point
say
that
that.
out. I mean, sometimes those kinds of things too will throw anomalies at what's happening. So
Yeah. I'm getting some folks that say no audio
it's back
frozen.
now. Yeah.
Oh, okay. Okay, cool. All right, so that's that. Let's look at some other ones now that we've added in these moving averages. Okay. Let's look at and remember, by the way, this is very important. Just because the sky.
That's you, Ray.
All right. Welcome back, folks. We were in the same situation you guys were in, unfortunately, with the technical issue. Hopefully, everybody can hear me now. I'm not sure where you got cut off and what you didn't hear last. Um, I added three moving averages onto a chart for studies. Um, and give me some comments in the chat if you would. Did y'all were y'all with me when I was showing you how to add the moving averages?
It's going to be.
Yes. Okay. I see. Yeah, we can hear. I can see you guys. All right. So I'm just going to roll, folks, right from where I left off for adding in the three moving averages, and we're going to start jumping into adding some other ones to uh, get you up to speed. All right. I'm trying to look at the. Okay. Good. All right, nice. Okay. So again, sorry for all that, and I appreciate your patience. It literally was out of all of our controls. We have a great team in the back that's our producers, so to speak. Okay, and they were doing everything they could to keep things rolling, and they got us back. And so, big hand to Andrew and Gabe, our two producers, and we thank them a lot, and we thank you all for hanging in there and being patient. Okay. All right. So looks like I've seen a lot of yeses. We're good to go. All right, cool. All right, here we go. Let's keep moving. All right, so here's ADM. I added three moving averages, and we're just looking at how we can use this to help us to make decisions as we're moving forward. Okay, so here the you got a short-term moving average rolling back up. It's actually getting ready to cross over through your intermediate term. It's in a long-term uptrend. So, this could have been a decision point for you guys if you've been watching this stock is in your watch list. Let's hit some other ones. Here we go. I'm going to change to this one people have heard of. Apple, yes. Okay, so what are our moving averages showing here? We got our intermediate term is sideways. We have our short term crossing up through, and we have our long term moving average on an uptrend as well. And what happened today? Although it is a red candle, okay, is the red candle higher than the previous day? The answer is yes. Okay. And did the red candle pass up through the short term moving average or back through a level of what? Here it was is maybe considered resistance. Now it's support again. Okay. So could that be an indication of some strength or price action that is more positive or going north, as we say? Okay. So that's why it's important to draw these moving averages in there. Use them to your advantage. Okay. But we're going to add some more here. What time do I got? I'm gonna skip looking through a lot of the examples right now and just start putting in some other indicators so that we can get our charts up to speed and using more information. So I'm going to go back now. So to our Erlenmeyer flask, here's the moving averages that we put in. Okay. And now we're going to go back over here and we're going to add some other ones. All right. Here's just one known as a MACD, all right? MACD, moving average convergence divergence. I like using the histogram one. Doesn't mean that it's better than anything else. It's just what I learned off of. So I'm going to use that. All right. I think Scott likes the histogram two line. I think you'd like. Is that right, Scott? Oh, you're on mute, I think. All right. And so I'm going to go here. I'm going to hit the histogram. I'm going to double click that. It moves it over to our area. Okay. The other one that I'm going to use, okay, is known as the RSI, Relative Strength Index. Okay. Right there it is, RSI. I'm going to double click that and I'm going to put that over there. Okay. And you can, matter of fact, for any of these, just like you can on the moving averages, if you want to change up the time frame they're looking at, you can make them longer or shorter in time if you wish. You just go to the gear, okay? And that's where you can change the time frames, you can change the colors, all those type things, okay? And RSI uses a 14-day default here. We're going to use the default for RSI, okay? And then another one that a lot of people always ask us about, and we don't talk much about it because we use the candles to indicate a lot of volume or a lot of that issue, and that is volume, okay? And so if I go up here and I just start typing in volume, all right, and volume average right there, all right. If I click that in there, and it comes with it'll draw a line, a 50 period moving average line on the volume, all right, and you can change that if you like as well. All right, so what we're going to do now, we have all these new indicators on here, and we're going to hit apply and OK. Now you have all these different indicators to help make a decision. Now, so quickly, moving average convergence divergence. It's looking at two different moving averages and smoothed out by the last number that was in that combination. You can see the 12, the 26, and the 9. Okay. So in this one, it kind of shows you how it's diverging away from the mean line. Okay. And you can see that when it's up here high, all right, it's in coming back towards the mean, or if it's down low, coming back up towards the mean line. So if you were looking as a trader to get into something like this, would you like to see the MACD traveling to the upside or traveling to the downside? What do you think? If you were to get into a trade, you'd probably like to see it moving to the upside, yes? Now the RSI, this indicator is a mean reverting indicator, okay? And you can see there's a 70 and a 30 range that are defaulted into the chart. But the RSI is looking at where are the prices closing relative to the last, in this case, 14 days. Where are the prices closing relative, okay, to their previous days over the last 14 days? Are they closing to the higher ranges or the lower ranges of the price action? So what we look in there is this. If they're closing towards the upper ranges or the higher ranges of the price action, that's saying that the money flow is coming in, all right, or a little more bullish in this activity. If they're closing to the lower ranges, then the RSI is going to be trailing down, and it's closing to the lower ranges or money's coming out potentially, okay? That's one way of looking at it. So in this case, if it's way above the 70, for example, up here, sometimes people say that, well, that's over what? Bought, okay? And then it should pull back, okay? Now, it could be overbought for a while, though. It doesn't mean just because it's up in the upper range that you should stop looking at it. Doesn't mean that at all. It just means it's just been an overbought range for a while. It could be overbought for a while. If it's in the lower ranges, like you see down here, then this could be what's known as oversold, okay? And it might trail upward because people might coming in. Scott Durfee did a good job of explaining that supply and demand before, and we did supply and demand with trend. Here's the cool thing about the RSI. You can use this also about a diverging thing. So let's say, the stock's been going up, but the RSI is going down. That's a divergence, all right? And if the RSI is going down, it's a bearish divergence. So you're saying, well, how is that important? Well, if the stock's going up, but the money's coming out of it a little bit, it's saying, well, maybe we're done putting money in, and you might see a lull, or it might not move up as hard or fast that you might thought of it as going based on its prior action. And we'll show some of those as we move through here in just a second. So now let's go back. Now we got these indicators. Oh, and by the way, volume. Let's do something real quick. Let's go to the gear. Now, some of you may have this on your charts already. If you go and Scott showed you this yesterday. All right, equities. If you have a volume bar already on your chart that you can't move around, or it's just sitting there for you, it's in where you don't like it, it's because you have under equities, you have show volume subgraph checked. I'm gonna hit apply. Okay, and you can see it's right there. Okay, it's right there. Now you can move these studies around, by the way, when you go into your here, you can move these studies in different places if you like, just by dragging them up or down. Okay. All right, but this one will not if it's part of your equities tab. So in this case, if you get rid of that one and you want to add the volume like I did, all you have to do is go to the gear, go to equities, uncheck that, hit apply, okay, and now it's gone. All right, and now you got volume down here. You can also, if you put your cursor over the separation bars, you can lower and raise the different studies, all right, and make the price action your most important graph if you like, but gives you an idea of what you're looking for. All right, so now let's go through and look at some examples here and see if we can find some of these stocks where the MACD might be rolling up, the RSI is moving up, and you got some volume. All right, and this just tells you, okay, one of the things that you might look at it as a good factor are stocks trading 1 million shares a day or more, right? Because you want that liquidity. So it's something, and then you have things like this with these big volume spikes. Can a big volume spike be an indication of a big move that could money's coming in or give you that strength activity? Okay. And by the way, how did I get them to be red and green? Well, if you go back to the gear and you go to appearance, and you can see right down here, all right, it says volume bars, color as symbol ticks. And if you check that, okay, that'll make your bars same color as your price action. All right, let's get moving. Let's look at some examples. Here we go. All right, I got some here. Let's look at UNH. And again, these are not recommendations, not endorsements. All right, so you got UNH, you got your RSI moving up, slight movement down on the MACD, price action is moving up, okay? And you're getting up to this all-time high that happened 6 months ago, or it's all-time high for the year. But is that when you see an all-time high, does that mean, can't trade it? Is that an all-time high? Can't go any higher? What do you guys think? All right. And I can tell you what my thoughts on this is that no, because there's a lot of times if you look at all-time highs and you go back and you go, well, it was an all-time high, 2 weeks ago also, or all-time high a month ago. All right. So just because you get an all-time high doesn't mean that it's done. Okay. Because you want to be on the bus going the right direction. All right. If it's going north, it's going north, correct? All right, so there's an example there of some price action going now. Here's another thing that's kind of unique. These gaps right here. All right, these were questions a lot of people came up with gaps, and we have some gaps here. This is a gap up. Here's a gap up. Okay, 2 in a row. All right, now our gap ups, are those anything you should be concerned about? The answer is yes. All right, that can be looked at as a giant move to the upside. Because what happened here is, the market closed here, and then they said the next morning, well, we think it's worth this now. So it gaps up. Closed here, now we think it's worth this. It moved up. So that's a very bullish type action, okay? When it's here and gaps down, that's a very bearish type action, okay? The other thing you always hear is, oh, the gaps got to fill. And no, the gaps do not have to fill, okay? So be cautious for that generality, if you will. Okay. All right. So let's look at some stocks. Okay. There's UNH. Let's look at DVN. All right. DVN. Here we go. All right. What's going on with our moving averages? All right. We got a short-term moving average crossing back up to the upside, crashing up through the intermediate term, crossed over today. All right. So we got 2 upward trending here. We got our long-term uptrend. What's going on with MACD? MACD is actually moving up. What's our RSI doing? Our RSI is moving up. Okay. So let's say this is one of those, you're saying, you know what? I kind of like this. All right. Maybe I want to get in. This is one of your stocks you're watching, and this is a stock that you might want to trade. How can you do this? Well, a couple things you can do. You can right click. Okay. And you can buy custom. Now, here's something that a lot of people don't think about. You've heard of stop orders on stocks to protect you on getting out, but you know you can put a stop order on the buy side. So you can go in and you can say, you know what? I'm willing to maybe get into this trade, but only if it gets to a certain price point. Okay. Then turn it to an active order and compete in the market with other trades. Okay. So it's called a buy stop. All right. So how do you do something like that? Well, if we do, and then we're not going to get into right now the managing the trade with regard to our risk levels. We're just going to do a basic trade right now. I know Scott, we had a good fun time yesterday with Scott told me, hey, buy 1,000 shares, right? And I went, no, 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 no. We missed a good opportunity here to say no, because that might not be a wise decision based on the price, right? So we'll get into that though. So I think Scott actually teaches that to us on Thursday. Yeah.
That's a pretty important part of the class, that's for
Yeah,
sure.
it is. So we're gonna do a buy custom, okay? And you can do with an OCO bracket, you can do with a stop, you can do stop limits, okay, any of those type things. Or if we don't want to do it that way, okay, we can just go in here to the trade tab, okay? And on the trade tab, all right, right up here to the top, let me close these down. All right, up here is the underlying stock information. And if I wanted to buy this stock right here, okay, I can just click on the ask price, okay. Then I can go over here to our, we'll keep it 100, and then I go to my order, okay. I can do a buy stop. Oh, it says market. And a lot of people get going, oh, I don't want to buy a market order, okay. But no, it means it's going to turn to a market when the price hits 59.60 or better, okay. Right now, the price of the stock, it traded at 49.48. So I may want to say, you know what? I want to see the stock price move up to make sure I'm on that northbound bus before I get into the trade. And then when it hits 49.60, turn that order into a market order. It'll compete with the rest of the orders out there. All right. And it'll use the standard order, which means it's going to go in on the ask price. Okay. And then if I do it for the day, that means it'll be good for tomorrow only. I could do good till cancel. I'll just do it for the day if it goes in for tomorrow. Okay. And I'll hit confirm and send. Now, always read these. All right. Buy 100 DVN. All right. Stop. All right. I'm going to buy stop 49.60 to open, which means to start the trade. Okay. And if I like all that, I see what's going to cost me to get into the trade. I hit send and off it goes, and we'll see if we get filled tomorrow. All right. But that's how you can use some of those decisions to help get in. Now, I want to do one more thing, all right, before we move on to the last couple of minutes of our class, because I know there's a lot of questions out there. I'm hoping that I'm sorry we missed a few minutes, but we are constrained to time. Let's look in and see what we got for another thing. I want to show you this real quick. All right. Some of you have heard of this stock, Meta. Okay. Now, Meta has been kind of going sideways, yes? Matter of fact, here's the 200-day moving average. Bouncing up against that. Is the 200-day moving average acting as a level of what? Resistance, right? You got your short-term moving average moving up. We got our intermediate going sideways. We got our MACD moving down. And here's the thing. This has been kind of going sideways, actually even up a little bit, right? Short-term's been moving up a little bit, but look at this. Look at what the RSI is saying. Now, we talked about this a minute ago. RSI is saying it's going to downtrend. So what did I say about the RSI? What is it measuring? It's measuring where the price has been closing over the last, in this case, 14 days on average. It's closing lower. So this is called a bearish divergence, okay? So you got a bearish divergence. The stock's been going sideways to up a little bit, right? Our short-term moving average tells us our short-term trend is up, but our RSI is moving down. So in this case, might you want to see this RSI rolling up, potentially the MACD rolling back up as well, and this breaking through this long-term moving average before you might want to get into that trade. Whereas before, let's say you didn't have any of this on the chart at all, that's looking like this price pattern that we talked about, known as a flag pattern. And we're going to get into that come Thursday. But this looks a little bit more of a bullish pattern. But when you go back and you put your studies back in, now it's telling you a different story. So maybe by using technical indicators now, you might be getting in at a more appropriate time or getting out at a more appropriate time. Scott Durfee, what say you, my fine friend?
I think you've done a great job, Ray, kind of culminating all of the things that we were hoping to culminate tonight. Way to go.
I appreciate you, my friend.
Yeah,
Now,
no
folks, here's the thing. Okay, let's go over let's go over a couple of recaps here, and then I got a couple of things for you guys to do. If someone could put in there the survey link, I think it's in there. Yep, it's
It's
in there.
there, Ray. It's pinned actually right now.
Pinned. Okay.
Yep.
So learn the candlestick patterns. Scott did a wonderful job explaining that to all of us. Learn those patterns. It's going to help you in the long run. And tell them that story as Scott said it. Okay. And then put the studies in that best help you. Again, there are no perfect studies. The studies that are the best studies are the ones that are going to tell you what you need to know to actually make the decisions you need to make when it comes to trading. Now then, this is our survey link. Okay, there's a bit.ly link in the bottom down there. Okay, as well. If you could do us a great service, and matter of fact, I read all the comments from yesterday's class, and it helps us a ton when it comes to doing things. One of the things, for example, for me was put my stuff on a bigger screen. Okay, so hopefully you saw that now. It's a bit cleaner to see now. That was one of the comments. The pace that we go at. Try to answer the questions we can the best we can when there's thousands of you, but we try to add that in as best we can and show you where to find other things like Scott did this morning. He showed you where to find the recordings and whatnot. Okay. And the other thing that helps us a ton is at the very bottom of your screen, there's a little black button that says subscribe. All right. If you want to be able to find these things quickly on our YouTube Trader Talks channel, hit that subscribe button. All right. And let's get us over, that 5,000 mark. All right? I know we may have lost a few folks when we had our issues with our technicals stuff today, but no pun intended. All right. But we want to make sure that we're giving you the best opportunity to learn as we can. And I hope you enjoyed today's class. I know I love doing this with Scott and with Scott on our chats and with all of you all. And I thank you very, very much for coming out. Scott Durfee, what say you, my friend?
Great event. Again, another great night. Thanks everybody for being with us. We look forward to being with you again tomorrow night.
There we go. And tomorrow, price patterns, bounces, and breaks. We're getting into more of the activity of making decisions of in and out. And again, thank you all very, very much. And Scott, same what?
Same bat time, same bat channel tomorrow night. We'll see you all then. Have a great night.
There you go. Have a great night, folks. Thanks very much.